Eric Mwathe for the weekend analysis for February 7th and February 8th, 2015. Let's take a look at how the US markets closed. And we see that the markets were pretty much down about 0.3% as far as the major averages in the US are concerned. Gold was down 2%, oil was up 3%, and we see that the VIX was pretty much slightly to the positive. And that's how market settled out for the week on Friday. If we take a look at performance on a week-to-week basis, we see that the S&P 500 was up 3% as it moved back above 50 on its weekly RSI. So we talked about that last weekend. Take a look at the Dow, which also snapped back its move below 50 and back above 50, something we discussed last weekend, and for a good move about 3.8%. And for the week, the Nasdaq was up the least pretty much because it did not move above 50, but still looks good because it's bouncing generally on the 50 level of the weekly RSI. Now, if this was the only chart to consider, the weekly charts, and the fact that they are bouncing on the 50 level of the weekly could suggest that more than likely this bounce on the 50 suggests that we have to go back and record new highs. So this is what it means without any other consideration, that the markets are going back and they're going to have to record new highs. Whether that's going to happen depends on other factors, of course. Let's go to the charts, begin by taking a look at the Nasdaq Weekly. And on the Nasdaq Weekly, we see that we did bounce on the previous line of support. In fact, the Nasdaq did not close below this like the Dow and the S&P 500 list did during the last week. So the Nasdaq held the best. So now we are technically between the previous highs and the most recent weekly closing high. So we are trading in this range. Obviously, if you are bullish, you'd like to see the market break out and trade above the prior weekly closing high of 4806.86 on the Nasdaq. So set an alert. Anything breaking out above that would be a fresh weekly move to new weekly closing highs, which would be very bullish. We also see that on the RSI, Nasdaq did come in contact with this line of support on the weekly RSI, the line going back to 2011 lows, and its market's been bouncing on this line. And most recently, we see a double bottom support on the Nasdaq. As long as the market is bouncing on that line, we should expect the market to continue moving higher week to week. Now, if we take a look at the Nasdaq Daily, we can see here that a little bit of a slight pause on the daily action based on the prior highs from about a week ago. So the market has come back to these highs here, seem to be stalling, coming off the highs for the day. And so we see that maybe this is a level of resistance. We could see that could also be making sense because it has been stalling on the daily RSI. If you draw a simple straight line like that, ever since this break, a simple straight line tells you and shows you where the market has been showing resistance, giving us the most recent high, a recent short-term high on the daily, which was there. And now we've come back here with the Friday negative close. We see that this is also continuing to show resistance. So we can see here that we came back during the pullback to this line of support, which we discussed over the last couple of weeks. The market held, and now we are stuck between two places. We have support on the downside on these two lines, and we seem to have resistance if you draw it like that. So two lines of resistance on the top, two lines of resistance on the bottom. I think eventually we are going to have to conclude either for a bullish move outside of that range or a bearish move below the range. So for now, we look like we're on the top side of the resistance. So more than likely day to day, this could be resistance unless the market can figure out how it can trade above that line. That would suggest that hour to hour, day to day, the market wants to pull back slightly. Take a look at the hourly on the Nasdaq, and we see that there was a prior channel, and that channel break was beginning of December 2014. Draw a simple straight line there, and you can see that ever since we broke down here, the market has been finding it difficult. Every time it comes here and drops, we have this pullback. It came close here, we had another pullback, and now we've come here, touched it, and now we seem to be pulling back. We can also see that clearly on the hourly RSI. If you draw it like that, you see that this is where the market has been finding it difficult to move above. We had seen resistance here, which gave us a high, seen resistance here, which gave us a short-term high, another resistance level there above the line, back below it with uniform activity, which is gave us that high, uniform activity above that red line and below it, which gave us that high. So hour to hour, we also see evidence that the market is due for a pullback. And in fact, we had been talking about this throughout the course of the week, that even though the market was making incremental new highs, the RSI was not necessarily following. We can also see short-term negative divergence, as the market did move to new hourly highs short-term, but the RSI made a lower low. So that could be setting up from some type of situation where we can see why the market came off the highs on Friday. We take a look at the Dow Weekly, and on the Dow Weekly we can see that it did hold support as discussed on the RSI on the weekly time frame. That held. Now keep in mind that since 2013, this move on the RSI, this breakout move above 50 and a breakout, has been very good for the market. Market did take off since this beginning weekly breakout early 2013. Since then, the market has been using 50 for a nice place to go back into the market after shallow pullback, using 50 again for a nice move back to new highs, using 50 again for a nice move back, using 50 again here, uniform activity below 50, back above it, which is there. So again, the key here is the uniform activity at the 50 line. And as of last week, we were talking about the possibility of this being a bounce area and for the market to move higher. It's exactly what happened. We also see that the Dow did finally reclaim the level above the previous support zone. So after spending one weekend below this line, it did bounce back this past week with good action. So bulls would like the market to go on and break out above the most recent weekly closing high of 18053.78. So a breakout above that range would be very bullish. So set an alert for that as an alert to let you know that the market is turning super strong, with a potential breakout above that level of 18053.71. Go to the Dow Daily, and the Dow Daily is kind of very noisy looking chart. I mean, look at all these lines here, lines, so many. What the heck? All right, I'll give you a nice clean chart for the Dow. Let's go to a clean daily chart for the Dow. All right, so here we go. What's going on here? Let's see what we got. Number one, like the Nasdaq, seemed to be some type of resistance. If you draw a simple straight line right there, it seems to give us an area in the market, and it's just really that you can't put too much weight on this, but this is where the market's recently been coming back and showing resistance. Again, we can't put too much weight on that, but we do see that this is an area where the market is struggling. If you take this line somewhere like there, and you can see uniform action below the line, above the line, and back below it, which is the ultimate high right now. And since then, every time we kiss that line a little bit, we stall in the market. As you can see, we hit that line, pull back, which was there. We hit that line again and pull back, which was here. So if you're a swing trader, this has been a nice place to use for a direction or bet on the market. So clearly, as long as the market is trading underneath this line, there's resistance. Of course, if the market can climb above that and trade above that line here, that would be bullish. So we have resistance on the top side. Hope that makes sense. And there's also another line that I would like to share with you. This line connects the prior highs through the high like there. And you can see that ever since the market jumped above that line, it went on to new highs and did have a nice move. All we have to do is extend the line, keep it on our charts, and you can see that it goes on down the road to give us nice sell signals. Every time we move below the line, which was here, we come off the highs and drop for a nice swing trade lower. We have uniform activity above the line and back below it, which gave us the ultimate high. And since then, we've had 3 other occasions where the market comes back to that line and gives us short-term high. So let me just show you those. So all these have become resistance. So we have those 2 lines telling us right now that as long as the Dow Hourly, daily RSI is below that line, we should expect a pullback. So that's the bearish short-term argument. On the bullish front, you can see that the prior line of support has been here on the daily RSI. So the market came back and held here with a double bottom most recently, which was these lows. So we have resistance on the top side there and support on the bottom side. Eventually, we are either going to be staying above that line for another bullish move to new highs, or maybe we're in a different market where we start trading underneath that line and we're in a bearish phase. Let's go to the Dow Hourly. And the Dow Hourly, we had been keeping a close eye on this chart because of the RSI action. Even though the market has been moving higher above prior resistance here, the market jumped above that prior line of resistance. We see that the RSI continues showing us resistance. So this is uniform action above that line and back below it. There's also another line of resistance right there. So those 2 lines we were watching and trying to see what the market was trying to say. As we've continued confirming resistance here, we were expecting a pullback. We already got that pullback on Friday. Whether there's more or not, tough to tell. But underneath those 2 lines is bearish. Above the line would be bullish. And so I guess we wait for the market to tell us. Below the line, bearish. Above the line, bullish. Don't forget, we are going into an options expiration week, so we should all expect some increase in volatility and trickery. The Dow Transports also held their support at the 50, something they've been doing since this move here. So this breakout move late 2012, which gave us this entry there. And since then, it's been coming back to the 50 and holding for nice swing trades. Holding the 50 again with uniform activity. Holding the 50 level with uniform activity below 50, back above it. Looks like a V-type recovery. Nice entry. V-type recovery there, back above 50, which is what happened this week. So the Dow Transports do look okay. A quick look at the daily for the Dow Transports. You see that we have what looks like RSI resistance into Friday's trade with that down action. So that line is showing resistance. And we are also very close to 50, which means that if we drop below 50 on a daily basis, we might have a big pullback on a day-to-day basis as far as the major averages are concerned. Take a look at the hourly for the Dow Transports, and just like the Dow itself, we have topside resistance on the hourly RSI, stalling the market at the highs of Friday, and also another line which gave us the high. So that line gave us the break point of the high. See whether I can show that. So this break point here was off the highs. We haven't been back since then. We came here, stalled, gave us a high. Uniform activity above the line, back below it, gave us a short-term high. And now uniform activity to the line and showing resistance, giving us another short-term high at about Dow Transports 9,000. So this chart does tell us that as long as the market is trading underneath these 2 lines, hour to hour, maybe even day to day, we should expect a pullback in the general market. But what's confusing is that the weeklies do indicate week to week the market looks good. Confused? Well, that's what the charts are saying. Take a look at the S&P 500, and just the same thing here, same observation. So let's go through this one quickly. Bouncing off the 50 has been good for the S&P 500 going back a couple years, and just like the other charts we discussed, it also did bounce back above 50 for a nice trade. And again, if you're a market bull, you'd like the S&P 500 to break out above the most recent weekly closing high, and that is at 2088.77. So a breakout above that is exactly what the doctor would order for the market bulls. So that's the level to watch. Anything above that is very bullish. But keep in mind the fact that as of right now, the more the S&P 500 continues trading above 50, the more we are going to have to be forced, due to sheer energy, to move and record new highs on that weekly time frame. S&P 500 daily, just like the other market, short-term resistance connecting the tops over the last couple of weeks. We came here Friday and was smacked back down. There's also another line of resistance, just like the other charts we talked about on this line here. No need to go into further detail because it's the same analysis. Finding resistance on that line. The bottom side shows support on this line here, support on the way down, resistance on the way up. Of course, eventually, if we can move above that resistance, that's bullish. If we can't move above that resistance, and if we eventually come back and trade below that line, then below this line, that would be bearish. S&P 500 hourly gave us the best chart in terms of signal. Take a look at this break point here and draw a simple straight line. Every time we come back below there, and you can see that this is uniform activity in price, and back below that line, the red line, uniform activity above the red line, back below it, that gives us a sell signal once it moves back below the line. And since then, we've come back again here, and we seem to be showing resistance. Take a look at the top side of the hourly, which is exactly where the S&P 500 was stalling on Friday. Also, there's another line of resistance if you do it like that, which gave us the sell point of the highs, which is this sell point here. So S&P 500 was telegraphing a pullback as the market continued to make new hourly moves over the past week. How much lower we can go remains to be seen. Let's take a look at the Canadian market, which had a nice week. Remember, I do cover other markets, but on the part 2 on the subscriber version. Take a look at the Canadian market, and we see it's coming back to a level on the weekly where it's had seen a previous short-term high. Don't put too much weight on this one because these are just lines, but it's come back to the prior intraday highs from a couple of weeks ago. Seem to be holding below that. We had a nice snapback move here on the weekly time frame, as it's now holding above 50. We'll see what happens. But we take a look at the daily, we might get some more information on the daily. We see that if it's gonna stall, we are starting to see signs of the prior high, intraday highs showing resistance on a day-to-day basis. It came back here on Friday and could not move above that. The RSI is also showing a level of a previous break. You draw it like that. You can see that this was a short-term high and a break, which gave us this high and a meaningful short-term sharp pullback lower. So we've come all the way back. If we continue coiling back below the line, that indicates that this is a short-term high and we are due for a pullback. In fact, if you take the same line backwards and see the break point where it breaks is exactly where we came off the high. So below this line is bearish, and of course above that line, and also so above that line here and above the line there is bullish. Below those two lines, of course, markets are bearish. Let's take a look at Apple. And we can see that on the monthly, let's go to the monthly. The monthly is back above 69.10, which is a sign of strength. Apple just needs to hold above the prior monthly closing high. Anything above that prior monthly closing high. And the price to watch there is the stock looks good and is breaking out as long as the monthly is above 118.46. So anything above that is a good indication of intention to continue making new highs. And the RSI holding above 69.1 is also a good indication of momentum. Take a look at the weekly. The weekly also needs to hold above the prior weekly closing high, which also happens to be the same price, which is 118.46. So holding above those two, or at least those time frame of 118.46 on the weekly and monthly, is bullish for the stock. If it moves back below that, maybe this breakout is not as strong. In fact, take a look at the hourly. That's the daily. Take a look at the hourly, and you can see that on the hourly, stock seems to be struggling to hold the prior break, which gave us this high, to a simple straight line. You can see that this level has become resistance here. So as long as this is becoming resistance, more than likely we are going to have to coil back down, and more than likely we are going to have to break below 118.46. If we do, that's indicating that momentum has run out. But if we can hold above this price range, and especially if the RSI can trade above that line of resistance, maybe there's hope. So 118.46 is the level to watch. Okay, so let's take a look at some monthly chart levels to watch for the Dow. The level to keep an eye on is this previous monthly closing high. If the Dow can stay above that, and that would be at a price of 17,828.24. Anything above that is bullish for the Dow. And also, if the Dow can continue moving its RSI and eventually move back above 69.1, that would also be bullish. So those two things, movement above that price range, and also the RSI moving back above 69.1. Take a look at the SPX. We can see that the SPX is already back above 69.1 on the monthly RSI, which is a sign of strength. And we can see that RSI also needs to be above this previous monthly closing high, and the level there is 2067.56. If it can stay above that price range, that's good, that's strong. Let's take a look at the Nasdaq on a monthly level. And the level to watch for the Nasdaq is if it can break out, and the bulls do want this to happen, that the Nasdaq breaks out above the most recent monthly closing high, of which the price there would be 47. So set an alert for this one, 4791.63. Anything above that is really indication of a strong market and one which you want to play to the upside. RSI is back above 69.1, which is also a good indication of strength. Eric Muadha, good luck. Enjoy the rest of your weekend. Part 2 is going to be ready for subscribers sometime during the weekend. Peace and blessings. I am out. Woo!